Happy Sunday, everyone. This is Scott, and welcome to the weekly trade report video for the week of December 4th, 2016. First off, I just want to say thank you guys for being subscribers to my service. I do my best to provide the best information that I can with what I'm seeing in the market. I'm not always active on Twitter and things like that because I may or may not be actively doing anything because I'm not a day trader. I'm more of a swing trader, and sometimes there's just nothing to do. And it's in those times where there's nothing to do that you have to sit on your hands and wait until the opportunities present themselves. And so I just want to say thank you guys. I really appreciate you subscribing, and if there's anything I can do to improve the service or help you guys, just let me know, and I'll be glad to provide some more videos for that. So first up, let's just take a quick look at one of the market indexes, the iShares Russell 2000 ETF, IWM, and just take a look at this. So basically the market went up 15 days in a row, so it had a really big run, and the last, let's say, 5 days, it's been kind of in a down move. I'm not really concerned with this because after such a big move, it's just normal to have a pullback after such a huge move, so nothing too concerning there. There's still a lot of good setups in the market, and I'm still finding a lot of really nice charts. So anyway, that's just the IWM. I don't see any abnormal action that really concerns at this point. Let's see here, and then SPY, similar thing. Big run up and then a few days of pullback here. Still above this key pivot point up here at around 220 on the SPY. So that nothing on the major index is really concerning me at this point. A couple of themes like oil are now starting to become some really a sector that's showing some really great chart patterns. And so first up, I want to go through some trades from last week. So last week was basically a slightly red week for me. I did pretty good on a few trades, and then a couple other ones I basically broke even, and one that I think I lost on a couple other ones. So that happens sometimes, but it's the ability to cut your losses when you're wrong and just move on to another trade. There's always another trade, and so you can't get everything perfect, or we'd be the richest people in the world. But so first up, let's just talk about one that I did right, which was EPM, which is an oil play, and this sector really turned on after the OPEC agreement, which happened on this basically day right here. And so this has been on the watch list for a while. I traded this before. I'm looking for this 850 spot was my key level here, because it had hit it back here, and then it kept testing it, poked through one time, and I bought it, I think, on this day here, and then I sold it for a minor loss. Bought it at 850, sold it at 830. But I kept watching this thing because I like, this thing's gonna go, and sure enough, on this day here, I bought in on let's see, right in here in this day, and I bought in right around 840, $8.40, and then the very next day, well, first of all, that day it ran up and then it faded back, but it really wasn't concerning me as long as it kind of maintained in this area right here. And then next day it had a really nice move, and I sold almost near the peak there at around 950, 940, I think was my average sell price. So I made, I don't know, maybe 10% on this. But so this was a good trade that I made last week, and this one might be going higher. But looking at this from a target perspective, you could use this 720 here. Maybe this is the bottom of this base, and then 850. So roughly $1 from the breakout, a little bit more. So 850 to 950. So that's basically a first target, 950, somewhere in that area. So this one was a good trade, and this one might actually head higher. Just keep an eye on it. A lot of the oil plays are looking good. ARRY is, I'm continuing to swing this thing ever since back here. This is one where when you're right, you sit tight, and a stock has to give you a reason to get out of it. And this one has never given me a reason to get out of it, and so I own it since back here before the 7 break. And then the 7 break, it ran up, had a little pullback, and then just kind of consolidated, creating a flag, which is normal for a stock. And so I just held it. It tried to break here, had a pullback, and then Friday it closed near the high. So this is a flag pattern it's creating here. It basically made new 52-week highs on Friday at 829, I think. Didn't hold it, closed a little bit back, at 822, but This is one of those swing plays where as long as it's acting right and the market's right, you just sit on your position because there's no reason to sell, and it continues to pay you. And that's where a lot of times these big runs, that's where you're going to make your money, is in these big winners. So ARRY still looks great here. CTRV, I think this one actually closed at like 202. I don't think it closed at 205. I don't know why E-Trade Pro is showing that, but this one, I've been eyeballing this ever since it had this run up and pullback, and it's just been consolidating in a range here. I'm in somewhere in this 215, something like that, somewhere in here. But as long as this kind of maintains here, I don't know, maybe 190, and it just kind of flatlining here. But I think the longer it bases here, the more likely it's going to, eventually make a big move and break out of this range to the upside. I could be wrong, in which case I would cut my losses here, but it's not a huge position. But I do like this one, the CTRV. I'm not sure when it's going to move, but I do like this consolidation here, so I still have a position here. IPCI was one that I actually had to cut. I think I broke even on the trade actually. I bought it right in here, 290. It had a move, and it was respecting this trend line right in here. And as long as it did that, I was going to hold tight and look for this thing to kind of break out of this recent high. Well, it did actually break out, and then it faded. And so I had a good opportunity to take profit up here, but I wanted to see if this thing could maintain this trend line and continue to make a bigger move, and it didn't. So I ended up taking basically a flat even trade there, and I closed it out just below 3 when it failed to hold basically the $3 spot, which was my line in the sand. And so it is. And so we'll continue to monitor this. Maybe this thing perks back up again, comes back up here near the high again, and then we'll trade it again if it tries to break out through this pivot point up here, right around 320. But it'll be, I'll keep watching it. So HOFT, this was kind of a liquid stock. Had a nice pattern. I tried to trade it. Basically, I had a breakout spot. Let's see, right in, this 2750 spot, and I actually did trade it. On this day, I bought it, and I was profitable, got to 28, and then it just faded all the way back down again, so I cut it. It didn't hold its gains, and so it is. Sometimes these things do this. This happens sometimes, but it's continuing to move up here. So this chart pattern looks good. I think it has earnings, or it recently had earnings, or it's having earnings early next week sometime. So probably best stay away from this one for now. HOFT. Disney is another one that I traded for a break-even trade. This one, I still like the chart, but at least at this point, it's failed to do what I expected it to do. So the strength lies in this big gap up, and so they had a pullback, and then it looked like it wanted to break out through this continuation pivot point right in here. And it did do that, actually. It closed above that. So on this day here, I was expecting this thing to break through 100, which, if you've read about Jesse Livermore, which, by the way, his book, How to Trade in Stocks, I recently reread that this weekend. I'm still reading through it, but it's a fantastic book. If you guys haven't read that book, written by Jesse Livermore in 1940, I believe, it is just a fantastic book, and it really provides some great insight on successful trading, as well as the pitfalls of traders and things you can fall into. But that book, and then the fictionalized biography, Reminiscences of a Stock Operator, which is another book about Jesse Livermore. I highly recommend, if you read anything, read those two books. It's really great, and it talks about his methods of trading and what he learned after 30 years, and how he learned to become more patient and look for the big swings instead of these minor fluctuations like he did early in his career, is what made him the big money. So just wanted to go off on a tangent there, but one of the things he talks about is these pivot points, like 100, 200, 300. As a stock breaks through there, it usually has a quick, fast move, and those are one of the pivot points he used. So on this Disney, I was looking for this thing to break through 100 and maybe have a quick move to 100, 101, 102, and it basically, it didn't hold. Intraday, it went above 100, it looked great, and then it started fading, and as it started to drop back below, I got in at 99.50 somewhere, and I got out at 99.50, so it was a break-even trade. It just didn't do what I expected to, and now it's pulling back to 99 or 98.64. So, but this is just a consolidation range, okay? It's just consolidating here. and it may perk back up again, and I'll try it again if it shows a, maybe this is, let's see here, maybe you can do something like this here, maybe this thing turns up again and tries to break, but it does look like it's creating a continuation consolidation pattern at this point. So there's Disney. ATRS is one that I sold. I'd been in here since 180, and I got most of my position. I sold some at 207 actually. It's very small, and then the rest of it I closed out at 201. But this one is, had a pullback, and then now it's setting up another continuation pivot point right up here at, 205, somewhere in here. I mean, the high was, I think 207 or 209, but Friday's action, this one actually, looks pretty good here. The ATRS here, if it could break through 205 or even 209, somewhere in that area, and make new highs, I think that would be a buy on this one. So this one still looks good. Let's move this. So, okay, ATRS, IIPR. So IIPR is another one that I had to take a loss on. This one was an IPO where I was thinking that because it's the first publicly traded marijuana company on the New York Stock Exchange, they would have some interest, and this thing could have some decent movement. But I was wrong. It came out and IPO'd, and I bought some as soon as it IPO'd, right around $20, and then it just faded. Okay, so I actually sold out at around, as it broke below 1950 intraday. You can look at the chart pattern, and so this one is continuing kind of to fall here, and maybe it starts to recover. But I think my mistake there is, when you're trading, we're looking at these breakout points or these pullbacks or whatever. You're looking for an important pivot point, okay? A pivot, a support, a continuation, breakout through a recent high or something like that. But you always have a level to risk off of, and you're looking for a pivot point. Well, this one didn't have anything, and so it's a brand new stock, and so that's probably a bad idea to make that trade. But anyway, I was able to cut my losses quick and move on. But and additionally to that, the sector has not been the marijuana sector, the OTC market. Most of them are in the OTC market. Hasn't been strong lately, and so you want to see sector strength. You want to see different stocks in the sector showing strength. That confirms the movement of an individual, and oftentimes you want to look at whatever stock you're trading. Look at the sister stock in the sector. Is there another one, a leader in the sector, that's showing a similar pattern? And that's going to give you more confirmation. And that's what, Livermore did that too. He always trade with sister stocks. He looked at two different stocks in the sector and see how they were acting relative to each other. Because if the underlying conditions that affect one stock in the economy, they should affect both of them. And so you should see similar kind of price action, which would confirm your movement. So anyway, there's another stock there, IIPR. But I'll continue watching it. If it starts to turn around, maybe it provides a breakout through this 2050 spot, which would give a buy point. So there's IIPR. And then last up that I traded was OCLR. I traded this. This was a day trade, and I really don't do day trades very often, but I seen this intraday on, I think, what was it, Wednesday? And so this was a recent pivot high right in this area here. And as it pulled back here, I was thinking, well, maybe this thing's going to hold this this 870 spot, because it looks like that, and it did actually that day. So I bought it at around 870, sold it. It got all the way back to 9, so it was a quick 20 30 cents I think I made on it, and then but it just continued to drop after that. So this is a quick day trade, but this support level didn't hold. So that was a successful trade, although the chart pattern still looks broken at this point. So I would stay away from OCLR at this point. Alright, so now let's get into the main watch list for this week, which there's some really pretty ones out for this week. So my top watch for this week is KTWO. This one just looks fantastic here. I'm probably gonna enter this on Monday morning. So this is it's got a very clean breakout here, right through this. It's sitting right there at the breakout spot. What is it, 1970 or something like that? Tested it once, pulled back, tested it twice, 3, and this is a 4th time, and it actually closed. This is the highest closing price in this range here. So this one looks fantastic here. And for a profit target, I would use the low, the average depth here for the first target. So here's 18. This thing's roughly 1960, you know, so $1.68, $2 from this breakout would be your first target. So I'd say 22 bucks. But I really, really like this chart setup here, this KTWO. It's a medical appliance company, and this KTWO looks just great. So this top watch from Monday, KTWO. Next up is another really great one here, CLCD. This one actually closed. You know, it's really confusing how E-Trade doesn't actually show the actual closing price. This one closed 38 something. Maybe I'll have to figure out why they're doing this, why they're not showing actual closing price. Anyway, but right in this area here, $39 has been a resistance level. So right in here, tested it. It tested up here, put some wicks in, and then failed. And then now it's starting to turn back up. So I really like this one for a breakout. I would use this lower trend line here, support, as a stop. Let me see if I can zoom in a little bit more. 50 day. Okay, so something like this, you know, and you're looking for a breakout. I think it closed up here, actually in 38 or something like that. So anyway, this one looks really good. It's a biotech stock, and it's been basing here for quite a while, and I think it's ready to make a move and break out of this range through 39 and go to you know, 40 plus, something like that. So there's CLCD. Next up, you know, ARY. Okay, so we talked about ARY. I'm still in this one. I think this one looks great. I think it's going to go higher. There's no weakness there. It still looks strong. Okay, so REN is another oil play. This one's had a fantastic run since it, you know, back here at $6 a few months ago, and now it's up here at 33. But it's got a clean break, breakout spot in here, maybe around 34, somewhere in this area here. Basically back here hit a high, tested it again, and then it looks like it's an oil play. Oil's strong right now, and this one looks like it's ready to make a breakout through 30, 35. Yeah, so let's say 34, and then clean break is right around 35, something like that. So, but this one looks good. This one does look good. REN, strong oil play. TRS. This one is creating a bull flag. It's a constructive consolidation after a breakout, and so it's just kind of sideways in this range. Tried to make a move. Friday, I actually think it closed a little bit high on the high day there, but right around there, I would say right around this 2170 spot. I think this one's going to go. So actually tried that day and then failed and broke back out. So that's not uncommon for these things to try to break out and then fail. You know, poke their head through and then spike back down a couple of times. That sometimes it takes a few tries for these things to actually break out and hold. And so that's where the patience comes in, and just waiting, and you know, maybe cutting it and then trying it again. So, but TRS looks good. Let's see, ASMB. Here's another biotech where it had a big run up, consolidation, and then Friday big volume spike. I'm not sure what the news was, but the recent pivot high is right around this 1420. The clean break is 1450 maybe, somewhere, yeah, 1450. So that would be a clean breakout, but it looks like it's closed up here right near the recent closing high back here at 1420. So this is one to watch for a continuation breakout through here. ASMB, it's a biotech. So Cliff is I think it's a coal company and a mining company, but just kind of looking at this chart pattern here, you know, it broke above this back here several months ago, had a high around 845, and it broke through that, you know, a couple weeks ago. But just kind of looking at this chart here, you had a breakout and then a range consolidation, kind of a flag pattern, and then it had a continuation breakout through the recent highs at 785, ran up and then pulled back, and now it's ramping up again. So this one looks like it's creating another continuation, this stair-stepping higher pattern that is very I mean, it's just showing you the line of least resistance at this point is up, And so you can kind of draw a trend line here, right? So here's the lower trend line. Here's your recent flag breakout right in here, and then it's creating another one, the recent high right around $10. And so this one, it appears that it looks like it's going to ramp up through 10 and make a new high. So that's what I'm thinking is going to happen on this one. This would be, and this one looks good. And so some of the other names in the sector with Cliff are some of these other coal plays. I think, let's see, SXC is one of them, which also is creating a flag pattern. Okay, see that, a run up, and then kind of the sideways tight solid consolidation range here. There's another one with a nice little flag pattern forming on the daily, and so that helps you confirm the strength in Cliff, because you look at other stocks in the sector and see how they're performing. And so a lot of these industrial metals and mineral miners, like Cliff, which mines for other things other than coal, but that sector, the mining, coal, industrial metals, things like that, it's been a strong sector. And so you're seeing strength across the board there, which helps confirm. Another one, and also the steel sector too. So they're both, and you can look at Nucor is I think Cliff's also a steel company too. But anyway, Nucor had this big breakout, created a little bit of a flag, broke out, and it's consolidation up here. Looks like it's going to go higher, and you're seeing that. This is NUE, but AK Steel and X, US Steel and TMST, all the steel names, very similar patterns. They're making new highs right now, and so then you just got to figure out, where do you get in? Well, you wait until these things have some type of consolidation, range pullback, and create a recent pivot high, like this one's kind of done right in here, and then you buy the breakout of that range, and that gives you a clean risk level, and so that way you're not buying when it's too extended and then it pulls back. So wait till it pulls back and consolidates and gives you a new pivot point to trade off of. But Nucor looks good, which is also a steel name. All right, Excel, another biotech. Although the biotech sector has been relatively weak, but there was a few in here that are creating some nice patterns here. So this one had a run up, another nice range. So it tried to break out Friday, and it didn't actually. Well, I guess technically it did close at the highest price of this consolidation range. But anyway, it looks like it's going to break out of this sideways tight range and continue its uptrend here. So Excel looks good. Also, a lot of these banks. So some of these banks are kind of illiquid, but they all show in very similar patterns. Some of them have broke out of their range consolidations, and some of them are just beginning. So here's kind of the deal here with these banks. A lot of them, they've had this big run up, and then obviously you can't buy after these things are up 4 or 5 days. You wait, these things pull back, and then they start to ramp up again. And so then you use the recent pivot high as your breakout level, as a continuation pivot of the previous trend. And this one, once again, E-Trade Pro is showing it closed at 38.77, but I think that's after hours. It closed near the highs, this FIBK. And so this one was a good trade. It was from our list here. As it breaks out through this range, it's showing you that it's ready to make it's making a new high after having a little reaction, and that's a trigger to go long. So you're seeing that across in several of these banks. Some of them are still in their consolidation ranges. Another one would be GBNK, was that one? Yeah, so this one too, this recent pivot high, if it can clean breakout through that, it'd be right around 2160, and here's your risk level here. So let's see how this one acts here. This would be a good risk level here off of this trend line or somewhere in this area, and then looking for this thing to break out of this ascending triangle type pattern and head up. So the banks at this point still look like they're both consolidating, and some of them are actually already broken out of the consolidation ranges and heading higher. All right, next up, AMID, another oil play. This one, it's been on the watch list before, and it's had a couple of failed breakouts. I think I traded it back in this time right here, and it failed to break, and then it just kind of fell off a cliff here. So it just needed more time to consolidate, so it is. That happens sometimes, but this one actually looks ready now. It can be wrong, but right around this 15, right in this area right here, the clean break 1550 if you want to be conservative, but it's tested this area 1520 area, once, twice, 3 times, 4, 5th time. So I mean, it looks like it's ready to go, and the oil sector is strong. So A-mid looks great here. This has been basing for a while, and average depth I would say right around 1360 to 1550 or 1520. So whatever that that delta there would be your first target on the trade. But A-mid is another one that looks great. All right, let's see here. ORIG is very it's kind of a cheaper name, a little more speculative, if you will, I guess. But this one, what looks interesting about this one is it had this big run up and pulled back, and now it looks like it's ramping back up. So basically 180 and the clean break would be right around 190. So you could buy the break of 180, and that would be a nice trade there with a risk. As long as you keep your tight stop. But this one, if it breaks 190, that's a clean break there on this O-rig. And if oil sector stays strong, I can see this one potentially doing that. So this is one on the, I'm watching too, O-rig. And let's see, one else. CCXI is another one. It's creating a bull flag, big run up, sideways range here. This one may need more time to consolidate. It poked its head through here, faded back down. So this one may just kind of flounder off, trade back down towards this resistance area. It may need more time to consolidate, or it may go. So it's just one to watch here. It's sitting right here, and it may make a move. And if it breaks out through, I'd say 840 area, that'd be a trigger to go long. It's ready to make another move higher. So CCXI. So all right, guys, that's all I got for now. KTWO top watch for Monday. I'll probably buy that one. As long as it's acting well Monday. I love that setup. And then CLCD is another top watch for me. So those two are the top watches. Let's see, was there anything else? Oh, I think SEAS was another one I wanted to show you guys. This is SeaWorld. This one got beat down for looking at a longer term chart. I don't know if this was when the whale controversy came out, but anyway, it was really beaten up, and then had a big run up here, and so it's creating a bull flag, and so maybe through 1750 area, clean break would be 1770. But watching this SeaWorld here, I think this one, as people kind of forget, if you will, about the whale incident and all that thing, eventually these things fade off, and all the bad news, because people will forget. That's just the way it is. And then this thing should recover here. But I like the SeaWorld SEAS. I think it's going to break out of this tight range here and continue higher. So, okay, that's all I got for tonight, guys. Hope you guys have a great weekend, great night tonight, and we'll see you guys tomorrow. And thanks again for being subscribers. See you guys later.